The leaders, so-called leaders, do not find themselves in a position to render any sort of account to you. That played out when you were asking a question about cost per kilometer, right? And nobody answered that question. And, so you are being forced to, accept their own conditions.
Hello, everyone, and welcome. Welcome back to Abai Trending Gist. Today, we are diving deep into Nigeria's economic landscape, looking at recent reports from the World Bank and what economic experts are saying. The World Bank recently upgraded Nigeria's growth outlook, which sounds like great news, right? But is that the full picture of ordinary Nigerians? We are going to explore the nuances, the challenges, and all the pressing issues of poverty in our nation. So stay tuned because this is a conversation you wouldn't want to miss. So sit back and take a watch.
Good morning, Professor Bongo. Always good to have you on the show.
Good morning. Thank you for having me.
Yeah, Prof, welcome.
Thank you very much.
I was saying before you joined us that, the World Bank is not a partisan organization. It's supposed to work with governments, help governments. So they are diplomats. So even the latest Nigerian development update, they are praising Nigeria, fiscal stability, foreign exchange strengthening, renewed hope agenda. They didn't use the phrase renewed hope agenda, but they are saying more or less that the government is doing well. So they say the economy of Nigeria is going to grow from 4.1% previously that they predicted, GDP growth, to 4.2%, and about 4.4% in 2026-2027. But they provided caveats. And I said this morning that we should be more interested in those caveats, namely high inflation, the need for fiscal transparency, and the need for social protection. And to worry also about the fact that about 139 million Nigerians, maybe additional, all of us are in that bracket anyway, have further gone into poverty. That's below the poverty line, as it were. So what do you make of all this? Whether you want to stay on the side of praise singing or you want to look at the underbelly that the World Bank has also pointed out.
No, I don't think that World Bank is praise singing in any way because they've been consistent. If you look at their development report, the updates last year, so they also show that the fiscal deficit has been shrinking. And then, of course, data will display that as well. So the fiscal deficit has been shrinking because of the reforms that the government has undertaken. So we give it to the government. So growth definitely has improved because the underlying macroeconomic conditions seem to have stabilized as they considered. Yeah, but the issue of poverty, that's where I want to really dive into. The thing is that we can eat our cake and have it. So there is the dilemma there, and it has raised a lot of debate in different fora. A lot of people are really livid that government is just about collecting money and all this, implementing market-based reforms without considering the welfare consequences and all of that. But the thing is this, if you look at the tax reform, for example, what will happen next year, it's important to look at that because I want to tie it back to poverty. Now, pre-May 2023, purchasing power in Nigeria, if you go by the PPP, purchasing power parity, so per capita income was almost $2,000. Today, per capita income, again, due to the devaluation, is about $800. Now, this is very insightful. Now, if you look at the tax reform, let's look at the bracket. 800,000 is zero. Attract zero tax rate, so they don't pay any tax. But then if you consider that $800 to the 800,000 naira today will fetch you only $500, as against over $1,600 before May 2023. Then look at the next bracket, which is 3 million. That I think attracts 15% tax. Okay, how much is 3 million naira in dollar terms today? So if you look at that, $3 million in dollar terms is about $1,700 or $1,800. But before then, okay, we're talking about almost $6,000 above $6,000 before May 2023. Then you go also on and on. So you notice something, that yes, the tax seems to be giving some sort of reprieve to low-income earners. But you notice that it's actually taxing more, given that the purchasing power of the money that people have has really shrunk. And then tax has increased, meaning that we are going to be seeing higher levels of poverty. Now
we're already seeing
it. Now, so the implication for this, for economic growth, is also deeper, because consider, it's important to to do this comparative analysis, okay? And then for you to do real comparative, I mean, in economic models, microeconomics, if you look at, if you're looking at welfare, you have to do comparative studies. What happens to equilibrium levels of prices or whatever, or purchases, demand bundles, if prices increase or prices decrease, so you need to do those things. Now, so what I'm talking about here is that if you compare our per capita income to other countries, right? So you will not be able to look at it from an investment perspective. If an investor, okay, would you prefer to go to a country where purchasing power has shrunk and people do not have that deep wallet to purchase goods and services, or would you prefer to go to those other countries that have those abilities to really, generate the revenue that you are looking for? So that is the really challenge that we have right now, because we are in a world that has become very competitive when it comes to investment. So the level of our incomes do not put us in any advantage position as it is right now. And yeah, so that is a trade-off that we have to have. And then growth is good, yeah? So that's the most important variable that we need to be looking at. But then the distributive consequences and the distributive lens of that is where we need to pay more attention to.
That was quite an insightful first part. We heard the initial optimism from the World Bank regarding Nigeria's upgraded growth outlook, projecting an increase from 4.1% to 4.2% and then 4.4% by 2026 to 2027. This positive forecast highlighted improved fiscal stability and strengthened foreign exchange. However, the first speaker was quick to point out critical caveats mentioned by the World Bank itself: high inflation, the urgent need for fiscal transparency, and the effective social protection measures. Alarmingly, the report indicates that about 139 million Nigerians are living below the poverty line. Professor Adi Bongo then joined the conversation, challenging the notion that these World Bank updates should be seen as praise, while acknowledging that government reforms have led to a shrinking fiscal deficit and a seeming stabilization of our underlying macroeconomic conditions. He underscores that this hasn't translated into an improved reality for the average Nigerian. He highlighted a stark decline in per capita income, which, measured by purchasing power parity, has plummeted from nearly $2,000 before May 2023 to just about $800 today due to the Naira's devaluation. He also pointed out that while new tax laws might appear to offer relief to low-income earners, the significantly reduced purchasing power means they are effectively paying more, pushing even more people into deeper poverty. Now, let's continue with the second part of the discussion to see how the government social protection initiatives are faring and the broadening implication for the Nigerian economy. Sit back and watch this.
All right, thank you very much. I hear you, and I'm glad that you talk about the purchasing power being instrumental or instructive in how we also attract investors to Nigeria, because this administration has been big on that. I don't know if you probably had an opportunity to read the NDU report and some of the suggestions or recommendations that were made to the Nigerian government. I'd like you to center on the social, provision of social protection, especially with the conditional cash transfers. The government has come out to list millions of Nigerians that are said to have received the first tranche of 25,000 naira. Why are we not seeing this play out in terms of it translating to some form of relief? Is it that it's not working and we should re-strategize, or something is not quite right?
So if you look at the evidence, whether it's conditional cash transfer or whatever social transfers that government has been making. So if you look at what the evidence from research, conditional cash transfers hasn't worked, that well in this part of the world. Now, so if you go back to Mexico, where all this thing started.
Brazil.
Bolsa
Familia.
Thank you. So, and then there is the Progressa in Mexico. That's where it started, actually. So it worked very well because they had institutional anchors that drove, the transfers. But here, I think they are more about politics. Because if you really want to make it work, there are established institutional social systems that we could deploy, whether it is the churches or the community-based organizations and whatever that have more credibility.
Sure.
So that
even Lapo,
right?
Even Lapo.
Exactly. So there are transparent institutions that we could deploy, but we haven't seen that, and that is why government is actually hard pressed to really, defend the claim that a lot of people have received this money.
So sorry, just very quickly, because brilliant point around institutions already established. What would then be the deterrent? What is currently working? They say they are making transfers to people with verified BVN. They can show us the account numbers, but we don't see these things. I don't know how many people you know that are, and maybe you don't know poor people. Maybe that's the thing.
Yeah, so if you don't know anybody, that means you're not poor, and then within your circle also, there is no poor person among them.
But at least we should hear people. We should see if millions of people are getting
transfers. I also raise these questions in my classes, the SMP Senior Managers Program. So there are some people who claim that they know people who have actually received these transfers. Okay. But the question to ask is, when somebody gets 25,000 naira in today's Nigeria, what would that fetch you? Would that improve your condition in any marginal way possible? I don't think so. So for me, I think it's too little, too late kind of thing.
Okay. In fact, Professor Adi Bongo, somebody recently wrote a letter to the, I think, NASCO, the authority in charge of the National Cash Transfer Scheme, and they replied by saying that they cannot release the data of the people they have given the money to. That is against privacy rights, and they quoted all of that. But at a national time like this, that means we have not seen the data anywhere. Because yes, you can give a couple of people across a spread, which is sort of like a random sampling, and not give the full amount totally. Except we have an empirical data spread that shows the 8.1 million, and that is peer-reviewed by many peer-review agencies. Even if they don't want to breach data privacy like they said, then we're not going anywhere in this country. And I think secondly, people like Lapo, they've made more impact than most conditional cash transfers in this country. And it's not today we know the politicization. We remember trader money, how it was politicized. But the edge I'm saying is it even tied to outcomes? Because things like this in Brazil was tied to outcomes. And I keep telling the story of how the kids that got Bolsa Familia when they were kids were those that are university graduates many years after they voted for Lula, because of what he did. And we saw the direct impact. It brought close to 20 million people out of poverty. So that's number one, in institutional direction. Secondly, we're hemorrhaging the value of our economy, and disposable income is reducing in the names of reforms. We are building reserves, but guess what? We are also going to borrow to service Eurobond maturity, rather than using reserves. Does it make sense? Because we just said we are borrowing now to service Eurobond maturity for November, and we have reserves of 42 billion. This is not your reserves you use. Does it make sense?
So when you talk about the foreign reserve is not something that you access. Well, yes, you can use it to service those obligations, but then again, note also that the reserve serves as a kind of a guarantee, a buffer for the economy, right? And then which raises your sovereign rating. So you don't want to deplete that as well. So perhaps it's better if it's more, I think, from a rational point of view, it would be more, it's desirable to borrow than to deplete your reserve, because the reserve is what gives you that credibility to be able to raise the funding because the no creditor will see you as credit worthy. But if you are reserved,
but if we borrow, we now incur interest and more maturities on the new borrowing.
Well, yes, but then if you can borrow, so you should.
Because
Instead
if
of
we have
depleting
42
what gives you
billion,
credibility.
if we have
for borrowing.
42 billion,
Yeah.
and we deployed 1.1 billion to clear our maturities for Eurobonds, we'll still have over 40 billion, which is not a bad, healthy reserve.
Yeah, but again, so let's look at the impact of the reserve on our foreign exchange as well. So you see the foreign exchange is beginning to, Naira is beginning to gain some momentum and stability, and it's actually thanks to that reserve. So the government.
But also dollar has been weaker on
Oh, yeah,
international.
but well, yes, but on balance, it's just because of the reserve that is accreting that we're having that stability. So government doesn't want to play with that. So I give that to them. Okay, so there's an issue that you raised about accountability and transparency, and then you brought in LAPO and all of that. When I came in, I was just playing with you over the interview you had with the minister the other day. So there is an issue here in Nigeria. I keep saying it, that we are not a tax-paying democracy. We are more like a revenue-sharing democracy. These are two different regimes, and they create different incentives and also induce different set of norms. Now, when you are a tax-paying democracy, you now have institutions that are accountable, that are transparent. Okay, so you can demand accountability as a citizen because you have a voice. But when you have a revenue-sharing democracy, you as a citizen does not have a voice. And the leaders, so-called leaders, do not find themselves in a position to render any sort of account to you. That played out when you were asking a question about cost per kilometer, right? And nobody answered that question. And, so you are being forced to, accept their own conditions. That is the kind of situation you have. So we have this different set of norms, okay, created by this system that we have. Okay, so for us to really make any headway when it comes to transparency and accountability, perhaps we need to look at all those institutions that help people, that shape the way we look at it.
Thank you so much.
Okay, Prof. Thank you very much indeed.
In this second clip, the discussion intensified around effectiveness of social protection measures, particularly the conditional cash transfer being implemented by the Nigerian government. Professor Adi Bongo strongly argued that these programs have largely failed to deliver their intended impact in Nigeria. He drew a crucial comparison with countries like Mexico and Brazil, where similar conditional cash transfer schemes such as Progressa achieves significant success due to robust institutional framework and transparency. He emphasized that in Nigeria, the lack of such institutional anchors has hindered the progress and raising concerns about the polarization of these transfers. Furthermore, a significant point of contention was the government's refusal to release data on the beneficiaries of these cash transfers, citing privacy rights. This immediately sparked questions about accountability and transparency, essential elements for building public trust and ensuring that aid reaches those who truly need it. Professor Bongo also dismissed the 25,000 naira conditional cash transfer as too little, too late to make any meaningful difference in alleviating poverty, given the current economic hardship and diminishing purchasing power. Finally, the conversation touched upon the strategic financial decision, specifically the government's choice to borrow to service Eurobond maturities rather than utilizing foreign reserves. While some see this as a prudent move to maintain reserve, Professor Bongo underscored the critical role of foreign reserve in providing economic stability and boosting a nation's sovereign rating, implying a delicate balance that needs careful consideration. He concluded by characterizing Nigeria as a revenue-sharing democracy rather than a tax-paying democracy, suggesting these fundamental differences contributes to a lack of genuine accountability from leaders to their citizens. What we've gathered from this discussion paints a rather complex picture of Nigeria's current economic situation. On one hand, the World Bank is observing macroeconomic improvements like shrinking fiscal deficit and stabilizing foreign exchange. Yet, the lived reality for many Nigerians, as highlighted by Professor Adi Bongo, is one of increasing hardship and deepening poverty. The stark contrast between per capita income before and after May 2023 is a critical indicator. Despite reforms, the devaluation of the naira has drastically reduced the purchasing power of citizens, effectively increasing their tax burden evenly with seemingly lower rates for some income brackets. This means that while the government might be balancing its book, the welfare of the ordinary Nigerians is deteriorating, with more people being pushed below poverty line. The effectiveness of social protection programs like conditional cash transfer is also under severe scrutiny. Without strong, transparent institutional framework, these initiatives risk becoming mere political tools rather than effective poverty alleviation strategies. The inability or unwillingness to provide verifiable data on beneficiaries undermines public trust and makes it difficult to assess the true impact of these programs. The idea that a 25,000 naira transfer can make a difference in today's economic climate is, as Professor Bongo puts it, too little, too late. Ultimately, the distinction between a tax-paying democracy and a revenue-sharing democracy is central to understanding the current challenges. In a revenue-sharing model where citizens don't directly feel the impact of taxation, their leverage to demand accountability and transparency from their leaders is significantly diminished. For Nigeria to truly thrive and for its economic growth to be inclusive, there needs to be a stronger alignment between macroeconomic indicators and the tangible prosperity of its citizens. This requires not just transform, but genuine commitment to transparency, accountability, and the establishment of robust institutions that ensure equitable distribution of wealth and effective social safety nets. So, GISFAM, that's our take on Nigeria's complex economic narrative. We've seen the numbers, heard the experts' opinion, and reflected on the real-world implications. What are your thoughts? Have you or anyone you know experienced the impact of these reforms? Share your experiences and insights in the comments below. Don't forget to like this video, share it with your friends and family, and subscribe to Abai Trending Gist for more compelling discussion. Hit that notification bell so you never miss an update. Until next time, stay informed and stay engaged.